Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 14th of February, Valentine's Day. And no massacre on the FTSE today. In fact, it's doing exactly what we were hoping it would do. The old resistance and the old target there was 87.30. We said that while above 87.30, we could go up to 9,000 by the end of next month. And lo and behold, the low today has been 87.30, right on the nose. If we go back below 87.30, though, the next level down probably 8600, which was resistance at the end of January, and also that uptrend line from the middle of January. We're not expecting worse than that, even though we've got a bit of bearish divergence in there, so higher highs this week for the London market, but slightly lower RSI trace. Moving along to the DAX, and this is a market that overshot the runway in a nice way, breaking through the top of that rising October trend channel. So that's absolutely amazing. We actually had the bear trap line reversal formation, which you normally see at the bottom of the range, not the top. And that was it's a very rather unique scenario, but above the old target there, 22,200. Looking for the top of that rising black November trend channel as high as 23,500 by the end of next month. Just amazing vertical progress there for this market. But key here is probably just staying above 22,000, which is also the floor of that November channel. Moving on to the Dow, which still is arguably an underperformer compared to the European markets. And here you can see that we're just in a range between, or the middle of the range between the 50-day line there, 43,700, and record highs, 45,000, looking for an end-of-day close above 45,000 to give us a move to the top of that rising trend channel from March as high as 46,700 by the end of next month. I suppose we could still say any dips towards the 50-day line are buying opportunities. We've also had a double bounce for the RSI above a neutral 50, which tends to be a good leading indicator on the upside. Moving along to Bitcoin, which is has been curiously stuck within a range between the uptrend line there from November, 94,000, and the 50-day line there, 98,500. Looking for an end-of-day close outside those parameters. On the downside, that would lead to maybe 90,000, which is post-November support. On the upside, hopefully back to the highs, and 105,000 plus. The negative is that we've had failures for the RSI below neutral 50, although it has to be said, there has been no follow-through on that, so it does look as though we're just simply in a range and holding above neckline support there, 94,000. Moving on to gold, which has been the star of the show of late, with people hoarding gold and transporting it from London to New York and anywhere else they want to go as well. Not a very convenient way, I suppose, of transporting the store of value, but obviously Bitcoin, a new way of doing that. But at the moment, above 2,900, we're looking for the top of that rising trend channel from April as high as $3,000. And ideally, we'd stay above 29.20 or at least 29.10, which was the initial February resistance. That should become new support. Moving along to the stocks and Alpha Growth, which has been a bit difficult child in terms of the charting, but I suppose that means one shouldn't necessarily avoid it. Bear trap rebound from below January support there at 1.35. Bullish divergence, and quite strong bullish divergence, so we're hoping that the shares will hit the top of the range and the top of that rising trend channel from the end of 2023 up towards 2.5 pence by the end of next month. But the key here, I think, is holding above the 1.4 pence area. On to Creightons, which is not perhaps the most followed stock around, but one should not discriminate. Here we've had a second gap to the upside in the recent past. The first one was last month, second one through the 50-day line this month, and also the shares bouncing above the 200-day moving average, which tends to be a leading indicator on the upside. Above the floor of the channel at 28 pence, looking for 45 pence by the end of next month, and ideally we stay above that 50-day line at 31.8 pence. Moving along to a stock which I don't think I've ever covered before, Carr's Group, and here couldn't resist it. It's a bear trap gap. In fact, it's a double bear trap gap reversal. Obviously not the most liquid situation in town, so those gaps slightly misleading, but we've got a broadening triangle there from April 2024, and the target here £1.66, while we're above the 200-day moving average at £1.28, and lots of nice bounces for the RSI there above neutral 50, so it does look as though there is some bullishness there. Cobra is next, and here stock which hasn't really, to be fair, Well, the share price hasn't reflected, I think, the promise of the company, but you can't argue with that. Rising trend channel here, going into what looks like a golden cross between the 50 and 200-day lines. About 1.1 pence, looking for 1.6 pence, perhaps by the end of next month, although given that this is not the most liquid or active stock, maybe that is a little bit optimistic. On to a stock which has got just the perfect, one of the more perfect setups here, Emmerson, and here, after kicking everybody out of the stock in October, very, very painfully, on 2 occasions with gaps down. We've had gaps. We had the gap up, which was around the 0.7 level, and then a sideways price action there above a rising 50-day line, one of our favourite setups, the sideways shuffle. You can see that most of the days so far this year there have been 2 red candles, so that is pretty impressive. Just approaching our first target there at 1.6 pence, above that looking for 2.4 pence by the end of next month, which would also fill the last October gap. But a stock which shows how cruel the market can be, just getting rid of people right at the bottom, or scaring them out, I suppose, is what happened there. Moving on to our second favourite Trump trade, which is Ferrexpo. This sort of led the way ahead of the election win for Trump in November. Somebody took a guess, obviously, from sub 40p. Current situation is it looks like we've established or re-established the previous 90 pence to, let's say, £1.15 range, and we're just as if the blip that we had on the 4th of February never happened. So above 90 pence, looking for 110 plus, maybe up to 115, and perhaps, given that there has been a rug pull, the next time we break through the 110 to 115 area, we'll keep going. RSI also now above neutral 50, which is a leading indicator on the upside. On to a stock where my guess, sniff test, has proved to be absolutely right. We've noticed that, well, I think it was around the 5 pence area actually, but we noticed that the stock here in Incanthera was shuffling along with a step type price action or price pattern. So sideways and then vertical, sideways and then vertical, as we've had today. The top of the gap there, 13 pence, and our best case scenario target was, or is, up to 20 pence by the end of next month, while we remain above a recent support at 7 pence. Moving along to stock which is also quite interesting at the moment, K3 Business, and here spiked up after the bear trap gap reversal that we had back in November, and pushing through the 50 and 200-day lines. The view at the moment is as little as an end-of-day close above the recent resistance could take the shares on the road towards £1.40 at the top of a broadening triangle, maybe by the end of next month, while we're above the, or we get above the 95 pence area on a weekly or daily close basis at least. On to light science, and here, if I can type in the right letters, you can see that bounced off the low end of the range. We've got the 50 and 200-day lines both rising, which is the buy signal here. So run up to a golden cross, looking for the shares to get up to 3.6 pence by the end of next month. Another stock which has been, which we got correct here on Bulletin board here has been Orosur, with the gap through the resistance that we had around 4 pence, with golden cross after that, and then another gap through with that resistance line, 7.7 pence. Current situation is that we've hit various targets, but we've got one more target to go, at least in the near term, which is a 2022 resistance line projection at 18 pence, and we're looking for that while we remain above 12 pence, basically support area, just near the support area of yesterday. On to the aquas market, which we look at very keenly, obviously. ProBiotix, here another broadening triangle situation, looking for 12 pence here while we're above the 50-day line there at 7.25 pence. And again, you can see that so far this year, we haven't had one red candle, which has some meaning, I think, in the scheme of things, especially if it is the aquas market. Nice little windfall for Serinus today, and here the market actually appreciating it, although I thought it was only 1.78 million. It wasn't very much money, but the market has appreciated, given that the market cap of the company is only 3.5 million, above the 200-day line at 2.7 pence, looking for 4 pence by the end of this move. On to a requested stock, which has been a bit of a white knuckle ride in the form of Sealand. It didn't stop going up, and then all of a sudden, once it hit 12 pence, it couldn't stop coming down. Best that can be said at the moment is that we've bounced off basically the 2025 support there, 1.5 pence. Our ultimate stop loss here may be 1.1 pence, but that's a long way away. So basically, looking for the shares to remain above 1.5 pence, and while they do that, there could be a day cap bounce back towards 4 pence. If you're really fussy, you would wait for an end-of-day close back above yesterday's high at 3 pence as a momentum buy signal, but probably one to avoid at least until we get a more strong signal there. Moving on to the to a stock which nearly missed out on, actually, Synectics, and here rising trend channel in place since June last year, top of the channel there, heading for up to £4.27, looking for that as soon as the end of next month, actually, given the way that we've had a triple bounce for the RSI on neutral 50, and that suggests that the longer we stay above the latest support area around the mid-330s, the greater the chance of a move up to the mid-420s. Onto a stock which I know a lot of people look at, which is Union Jack Oil, and here we've gapped off the low. We've gapped up again, actually. We had a bear trap gap reversal last month, which I missed, which is a bit of a shame because it was around 9.5 pence. Since then, we've made progress above a rising 50-day line and gapped up today. Triple RSI rebound at neutral 50, so lots of positives here, and looking for 16 pence by the end of next month or even sooner, while we remain above the 50-day moving average at 10.5 pence. A stock which I think I'm looking at only for the second time ever is Wynnstay, and here the reason for that is that there's a bit of smug feeling. The shares hit that initial target there around £3.42, right on the nose today. End of day close above £3.42, which hopefully could give a new stage up to 403 pence by maybe the end of next month, while we remain above the 200-day line at £3.34. That's it for me today. More updates over the weekend.